Good evening, everybody. It is December 21st. Doesn't seem possible. This doesn't seem possible. All right, we're going to just kind of have a potpourri of different observations. This will all kind of relate into, I got people wanting to know how you short stocks, what are good entry for shorting stocks, what are the criteria for indicating whether if you've got a bunch of good trades, which ones are the best out of all of those. So we'll not make this a very long session tonight, but it would be a good time to ask any questions that you have. So first of all, we'll just take a look at the market. This is where my first observation is, which way is the market going right now? And if I can look at this chart and say, have no idea which way they want to take the market, that means I'm going to kind of be sitting back a little bit more without any major emphasis or any major requirement to get into either long or short positions unless they have very compelling chart setups. Now the NASDAQ might have a little bit better indication with a best friend gap up and a close above the T line. However, I would still assume until there's major confirmation that we're still in a downtrend. Now that can change on a positive open tomorrow and strong buying, but we can see where the trend channel is, and we can see that we're not in the oversold area, and we're really not in any major move as far as stochastics are concerned. So that puts a little bit of skepticism into which way this market's actually going. Because just like they popped it up this direction, just like they took it up here and then took it right back down and then taking it back up, they could easily take it right back down tomorrow. Now that's because investor sentiment is probably being whipsawed based upon all the COVID stuff and Joe Manchin saying no and all the politics that are going on in Washington. So we don't really have a firm grasp of what's happening, because on any given day, obviously, there could be another announcement that could send the market skyrocketing or send the market crashing. We don't have any evidence that there's an investor sentiment buildup in one direction or the other right now. So that's a long dissertation to say I would rather wait. Oops, I knew this was going to happen. Hold on, this is the boss. Let's see, where was I? Oh, so we really don't have any defined trend in the market. So when that occurs, oops, the Russell was a little bit stronger today with your best friend signal. So you've still got this sideways move, but a double bottom potential. Obviously, this area becomes a resistance level. So what this boils down to is if you're doing any trades, they're probably going to be very short-term trades. It looks like some of the real estate stocks are coming back. This is real, kind of a morning star signal. Now you watch to see if there's bullish confirmation. I'm going to go through these because as I was doing them, I had things that I could illustrate as far as some of the other topics. Meaning, which ones do I think are the best as far as getting into? Well, after I do all my scans, and you come up with Walter, let's just hold on to any aren't those ones we looked at before the end of the day? But obviously a fry pan bottom. Where would be our first likely target? Up here at the 50. If it goes through the 50, then what do we have? Got kind of a fry pan bottom breakout. So the one thing that I look at when I decide which ones are the strongest, if you've gone through the top rank signals and patterns, we know that the best friend signal is one of your strongest signals. So here's our calculation. We can see there's a downtrend, obviously. Got a best friend signal. Bounced from a doji up off the 50 through the T-line. If it breaks through this level, what can we assume? That this is wave 3 and this is wave 1. So that becomes, even though the percentage move might not be dramatic, even though it's pretty good on that move, at this price I'd be looking at setting up a setting up an option strategy. Same scenario on something like Micron. There's your classic pattern. There's your fry pan bottom. There's a J-hook. And then here's another J-hook type setup with your best friend signal. So what would we calculate? Is this actually a... That's what I thought. When it broke through this level with a gap up, now we've got wave 1, wave 2, wave 3. So that becomes a strong buy. So first of all, I want to see what the signal strength is. Obviously, a best friend signal is one of your strongest. Secondly, I want to see where the stochastics are. In this case, it didn't matter all that much because we could see it was breaking through. Third, I want to see what the magnitude of the next move could possibly be. Now, if this was a 4% move, I might not bother with it. If this is a 30% move, that becomes much more compelling. On mu, is this when you turn a call? Well, if I had bought the calls today and then it started confirming, I would hold on to my calls, and then if I suspect they're in a wave 3 and that's the magnitude of my move, I wouldn't be buying more calls. I'd be more apt to go after spreads. So that's so that's why this one moved BR, was because of the good strong earnings. Another fry pan bottom, starting off with kind of another little best friend inverted hammer. Where do you think the first likely target is going to be? Obviously up here to the 50. So if I was buying this on positive trading, at least I know that I'm heading in a positive direction with a high degree of probability. and I know where my first resistance level might be, right here. But if it came up here and resisted, at least I know I can get out and still have a little bit of a profit, but I was buying something that I knew that was heading in the right direction. Then the other side of the coin is if it gets up here and goes through, now I know I've got a much bigger upside potential. So this is not a signal. That's just an up day. That's not a signal. But this and this becomes a signal, and this kind of gives you a major signal. This is your doji bullish confirmation in the oversold area. Now you add this all together, now you've got a morning star signal that has closed above the T line. That becomes a much more relevant reason to be buying. So this becomes an easy entry strategy. First of all, what do we want to see based upon our entry strategies? Obviously, we don't want to see that the pre-market futures are showing that the market's going to be opening down 140 points. Secondly, if the market is opening positive or flat, we don't want to see this opening down here. That tells you there isn't any bullish sentiment. And so what we want to see is the market's not falling out of bed. It's continuing its trend, and this is opening positive. Now at least we have a game format. Farard, what part of Houston are you in? What if it gaps up? What do we want to see, Nash, if we see a buy signal in the oversold area and it gaps up? We definitely want to be ready to be buying it almost immediately. Now I say almost immediately. Obviously we don't want to see it gap up and immediately start selling off. If it does, what's our entry strategy? If it opens and immediately starts selling off, if it comes back up through the open, that's when you want to buy. That tells you the profit taking is over. I found it very hard to trade today as everything rose very quickly, which kept me out of what I wanted to trade after your warning to watch for the bounce. Jace, that's exactly what happens sometimes. There are days where they pop it up. You're in a downtrend. Your stochastics are not confirming. You don't have a reversal signal. Sometimes you just have to sit and say, well, I don't want to be chasing after this because I don't have anything in the market that's telling me this is a major reversal. Number one, we don't have a reversal signal. Yeah, number two, we don't have stochastics in the oversold area. Now, this was much more compelling, obviously. That is a reversal signal in the oversold area, right at a major support level that everybody's watching. So on days like this, you just have to sit. Now, a major facet of successful trading is there are some days where the trades aren't worth doing, even though you've missed them. Not saying you, Jace, just us in general. If we've missed trades, fortunately there's another 210 trading days that when we get a better feel for what the market's doing, that's when you want to expose your investment funds. Now, you can also calculate when a sector is acting well. When you can see the bullish Nash, this would be the same scenario. You see buy signals and they gap it up. If they start trading positive, that's telling you exactly what they've done based upon that signal. They're confirming. Same thing with Royal Caribbean. And I am going to buy the casino stocks, Las Vegas Sands. Now, is this anything great? Yeah, it looks pretty good. There's your doji, big move up through the T-line. What else can you kind of visually analyze that makes this more compelling? The fact that they did it right at the same level before. Nash, I think what the reality is, and this is where it helps your analysis, or my analysis, that if they were moving up all these casinos and cruise lines, obviously that means everybody thinks they're going to be coming back, traveling again, or going to the casinos. Why would that be happening when it looks like there's bad news on the COVID? Well, somebody's probably digging a little bit deeper, seeing that this new Omicron part of the COVID is very mild, and may also have the indications that this might be the end of the COVID. And it might even be that if it's a mild case, that when you get it and you have sniffles and like a bad cold and you get over it, now you might be naturally immune after that. So that might be the thinking. Would you place greater emphasis on a trade that is located around a major moving average? Definitely. What was the one that we just looked at where I can't remember? No, that wasn't it. Darn, we were just looking at one where it did a big bullish harami right on the 200. No, that wasn't it. Well, when did we just do that, where we were pointing out that it, was it the Dow, maybe? Yeah, that was it. This is not a reversal signal, and it's not really, didn't quite touch the 200, but this is the reversal signal. And where do you think everybody else was watching? To see what was going to happen at a major moving average that everybody has on their charts. So it's not that we're witnessing a reversal signal that's telling us that this is acting as support. It's the other way around. This is telling us that everybody's buying here, creating a bullish signal, which is what tells us that everybody's buying here. And where's everybody buying? At a level that they can all see could possibly be a support level. So that's the whole basis of the graphics of candlesticks, is to let us know what everybody else is thinking. So going back to this analysis, if they're buying the casinos, they're buying the cruise lines, it looks like they're buying the airlines, that's kind of an indication that whoever's making their decisions, which is apparently pretty much across the board, that the COVID strand might be now weakening and coming to an end. And that's what's creating the buying in those areas. I think Penn was another one that has, excuse me, a nice little doji sandwich type setup. But there's your bullish engulfing. So what is our simple premise for buying or selling. Witnessing a candlestick signal in the oversold condition and a close above the T-line. Jay, no, you can't really say that. I guess today is supposedly the day when you might see a Santa Claus rally starting. But remember, there's a lot of trend indications like a Santa Claus rally based upon the probabilities, because it's happened quite a bit in the past, that it could probably be happening again. And I keep using the word probably because we've got a way to verify whether that's working that same way or not by what the candlestick signals are actually telling us. If the airline charts basically look the same, are you opposed to airline ETF? No. And it's probably the other way around. Probably the airline ETF is confirming that all your airline stocks are moving in the right direction. So another aspect of which signals are the best are the bigger the signal, the more compelling there's been a change of investor sentiment. That's ISPC. This is your kind of your doji sandwich, gap up best friend. And what are all the other visual elements that you can see on this chart that would indicate the bears or the bulls are definitely in control? Well, number one, it's the best friend signal. Number two, they bounced up off the T-line. Number three, they went through the 50. Number four, they broke this downtrend. That just implies there is a heck of a lot of strength coming into that chart. So if I was ready to buy this tomorrow, which we might be, I would go to the news and see what the news was that created that price move. Jay, that is the next. That's why I'm a little bit not suspicious, but a little bit cautious, because what is the nature of the market? The nature of the market is it's kind of whipsawy, and that doesn't mean just because you had a big day that whipsawy movement has changed. We're still in a market condition that you would consider whipsawy. So this is why the visual of the candlesticks tell you which way is the trend going, and if there's a trend, what's the nature of the trend, or what is the nature of the buying and selling. Now here you can pretty much tell there was a consistency. Here you could tell there was a consistency. Here you can't tell which way it's going, and from what it looks like, it might be in a wedge formation, which means it's going to be moving sideways. Okay, and that was the only thing, CG, was that they were just going to be presenting. The Bears were not in control last night, lost by 8. Okay. So I'd look at this one to say, all right, wave 1 is approximately 6 points, 7 points. Now I can see buying. There's a morning star signal, a bounce off the 34. So where would I start buying? on positive trading tomorrow. Now, what is my analysis, again, to say, is this worthwhile buying tomorrow? One, if this is wave one at 7 points, that's a significant move up from here. Two, we can see exactly where the breakout level is. Three, we can see it's a J-hook type pattern. Four tells us we're not in the overbought condition. And five, we know what would make this a bad trade if it opened positive. If it came back and closed below the close of today, what would that tell us about the breakout? It didn't occur. You close it right back out. For the last 6 weeks, I have been getting stopped out by the whipsaw. Now I'm a deer in headlights. John, you're not. Your analysis should be, I'm getting whipsawed. What's the direction of the market? It's indecisive. So what's that tell me I'm doing? I should not be doing anything unless the chart I'm looking at has very compelling reasons to be buying. So I'm not going after anything with any aggressiveness. I'm watching these are the Dow futures are up 34, but for all we know, when we wake up, the Dow futures could be down here, and we're still in an indecisive market. So it is easy to identify when you want to be long, when you want to be short, when you want to be long, and when you might not know which way to go. Sit out for a few days. Oh, is that the... Oh, I don't know which one the Qs are for after hours. Nash, yes, there was lots of bullish haramis. There was a lot of best friends. But what do we want to see tomorrow? Obviously, we need to see if there's bullish confirmation. So here's another best friend, ERJ. One, look at the magnitude of the move. Two, went through the 200, the T-line, the 34, and above the 50. This makes for very easy entry. If it's trading positive, you can be buying. If I was buying right here, where would I not want to see it close? Back below the 50, which the 50 has been telling us it's been acting as a resistance level. What would be my expectation, though, on a best friend gap up like this? More upside. KC, nothing great except if you like to buy the bottoming action. Look at your little bullish harami. Didn't confirm by getting up through the T-line. Now you've got a little, not a kicker type signal, but you are up through the T-line. That would give you a lot more indication of the bulls taking control. That you could be buying. Same scenario on VNet. Kind of a little kicker type signal. Basing action, a close above the T-line. What's the implication? It's in an uptrend. Now, do we know where it's going to go? Not really. However, my first target would be the 34. My second target would be the 50, which is right where it had gapped down. So, again, if I looked at this and this had a 4% potential, why waste your money? Or why have your money someplace that's not going to make you a lot of money? But if we're looking at moving from here to here, giving you 4 points on a $9 stock, I can figure this out. That's about an 80% upside. Yes, that makes it worthwhile. Now, does that mean it's going to get there? Definitely not. But at least when I see the buying, I know what my potential could be. So if I'm buying here, what are my expectations? I'd like to see it go to this level. But when do I sell? When I see a sell signal. Remember, the number one criteria for candlestick analysis is the signals. LPI. Oh. Best friend signal up through the T-line, opened at the 200. What other implication? A double bottom. I was with you last year at this time. My experience was that our chat room was a 2/3 of our people were not present between Christmas and New Year's. You said the charts were good, but the volume was not enough to move the positions. I got beat up. What is this Santa Claus really stuff about? Jace, I don't know what to tell you there, but at any given time, I wouldn't say the 2/3. Yeah, usually there's very little trading, or there hadn't been. Now, last year I thought there would have been because of everybody being stuck inside. But it still boils down to, no matter how many people are trading or not trading, the signals are still going to be the graphic depiction of everybody making the decisions that day. And sometimes the decisions are being made by less people, sometimes more, but the decisions are still being made that create the signals. And it might have been the same type of scenario that between Christmas and New Year's, the market might have been doing this. You still have to make that same assessment. Is this something I want to be trading right now, or is there non-direction? All right, so just like we saw in the casinos and cruise lines, they're all being bought. Well, we can see that the crude oil or the drilling companies are being bought. So there's a nice bobble breakout with a Morningstar signal on Patterson Energy. What would we expect from here? Well, first of all, we know this is a very strong signal. Secondly, we know it's a good strong pattern of bobble breakout. Third, we know this is wave 1. Wave 3 should take us up, at least up into this range, which would be about a 15 to 18% move with a high probability it's moving in the right direction. A cup and handle, you could call it a cup and handle. I'm looking at more of the Japanese definition of a kind of a bobble breakout. Ray, that's yeah, but that's one of those generalizations also. Again, I don't, or either way to say it is, I hate all generalizations. So generalizations don't mean a whole lot. It means that's what could possibly happen, but I let the charts tell me what's exactly happening. So this one doesn't look dramatically exciting, except for the fact that the initial move was huge. Went from 5 to 45 in just a few days. However, we've got a little inverted hammer, which is a red candle, then a gap up doji. If this opens positive, at least you might have a trade, because now it becomes an inverted hammer, bullish flutter kicker potential in the oversold area. Could it go all the way back up to 45? At least I'd be looking for it to come up here, which 8 points on a $17 stock, that's another 45% trade. And the probabilities, if it opens positive, that bullish flutter kicker type signal, and positive trading after an inverted hammer, this gives me a high probability that it's going to move in the right direction. So there is your kicker signal. I think this is one of the mining companies, isn't it? TMST. So that one I would be going after. Because observe the obvious. Where did it kind of support? Right at a level that everybody else was watching. Where was it not resisting? Right at a level that everybody was watching. Where's your next likely target? This would be my first target, and then this trajectory would be my second target. All right, thank you, Marshall. There's your fry pan bottom. Now, I know you've all studied your patterns. What do we expect coming out of a fry pan bottom to confirm it? A strong price move. So we've got a little bullish engulfing signal, fry pan bottom, gap up, breakout through the 50, confirming your fry pan bottom with a strong signal. What's that imply? That you definitely want to be buying this one on positive trading. Seeing a lot of double bottoms, yes. When you see a lot of the same type of patterns on different charts, does that usually mean it's more reliable indication of a change of trend? Yes. Now, the reason we look at double bottoms is because we know what the results usually are from double bottoms. That's where they couldn't take it any lower and the bulls take control. And it's like anything else. If you see a lot of buying in the across the board in the cruise lines, that means they're buying across the board in the cruise lines. If you see a lot of double bottoms, that means those are patterns that are telling you the bulls are in control in a different or a number of different stocks. So it just improves the probabilities of that you're in the right place at the right time. There's your J-hook pattern, or your 45 degree. This is always good information. When you see that gap up, indecision, then the next day the trading positive, that tells you this gap up is usually the prelude to a 45 degree. Yep, double bottoms, like double chins. Or it always kind of reminds me of the lady that backed into the meat grinder. She got a little behind in her work. All right, so somebody was Oh, did I? It's probably too late, yes. So this is more than if you were buying somewhere in this area, you would expect a 45 degree, you would just stay long. Now on the short side, somebody was asking how do you short or what are shorts? Shorts are very simple now, I think. There used to be a uptick rule that you couldn't short stocks unless it upticked. But then they changed that, about a decade ago. And you short by just putting in a sell signal, a sell order. And obviously, if you're trading online electronically, if you're selling 1,000 shares of XYZ and you don't own it, well, electronically it already automatically indicates that you're shorting that stock. Yeah, but there was the rationale for the uptick rule was established many decades ago. It was because even back during the Depression, that if you were a big trader and there was a stock that was starting to get a little bit soft, you could just start shorting it, which meant every time you shorted the position, you would knock it down some. And then you'd short some more, knock it down more. And as it kept going down, everybody would get panicky and they would start selling their stock. So it would crash or move the stock price down more. So whoever started shorting it to make it go into a downtrend just then covered later and made a big profit on scaring everybody. So they wanted to get rid of that capability by saying if you're shorting, you can only short if it's an uptick, somebody's buying the order. It may have been in 1938, yes. All right. Yep, I didn't know what the dates were, but this is what you want to get from your graphics, the candlesticks. If you looked at Sava today, Sava was up $6.90. A lot of people would say, oh, that's really great. But when you look at the graphics, they opened it up here and closed it down here. We can see graphically that that's not a very bullish indication. That's still warrants going short, which means if this opened lower tomorrow, then you could short it. And there's two ways you can short it. Obviously, short the stock by just selling it or buying the puts. Anytime you see that bearish kicker signal, look at your shooting star, just as it climbed into the overbought area. Then it gapped down from here to here. This is one part of day trading that I didn't get into on Saturday, but this is a very high probability trade. But if you see a sell signal that far away from the T line and it gaps down, where do you think your first target is? Right there. Now, for somebody that's real aggressive, you're that far away from the T line and you go to your 10-minute chart and it's starting to roll over and you close your longs here, you might, if you're real gutsy, start going short because of the fact that you're that far away from the T line. Okay, Jay, I didn't know that. So this is where anytime you see that gap down, no matter what you think, and This is where you do as I say, not as I do. No matter what you think, that's telling you there's an awfully strong downtrend or down force. Same thing over here. When you saw that gap down below the previous day's open, it was heading in this direction. But what was the other implication? The sellers had taken control. So as far as my long-term trade on this, we closed it out when it didn't hold the 200 because it was still telling us we're heading down and we weren't into the oversold area yet. And the reason for that was we could always buy back when we saw the next buy signal. But this right here is something that you always want to address. You can see the big signal here, confirmation. But notice what they did here. They gapped up, but came right back down again. That's not a good bullish move. And stays in force even if the price recovers that day. Which one were we looking at? Even if it recovered, yes, you still have the force implication that they gapped it down and traded it lower. This right here, from closing up here, again, look how far away you're starting to move from the T-line, and the gap down from there to there told you get out of it right away, and then right in here you could start shorting it. This is not a pretty picture. They gapped it up back in when discussing. Did you say anything about QSI? I thought I did. Yes, I did. I've even got a star next to it. I don't think QSI has anything to do with QuantumScape. I think they're two different companies, aren't they? Okay. It's a biotech. All right. Now I forgot what I was thinking. Well, somebody was asking, oh, did we do QSI? Yes, QSI. I will probably recommend this on a positive open tomorrow. Oh, we didn't get to. So this is not a pretty picture. They gap it up and bring it back down. What other piece of evidence do we have that this is not good? Because in the downtrend, they brought it back. Was the one thing they couldn't do? They couldn't close it above the T-line. What do you got going on now? Wave 1, wave 2, and now this kind of big bearish engulfing belt hold type signal tells you, yeah, maybe you're heading down to the 200. Whenever you see that gap down, if you are long, I can tell you from experience that if you're long and they gap it down below the previous day's open, you want to close it as fast as you can. Remember, I always illustrate this because I went through it many times myself. That if you don't close it immediately, remember the probabilities have just gone dramatically against you that they're gapping it down from an oversold position. Where's your first likely target, at least back to the T-line? But if you don't close it immediately, first of all, the probabilities of them being up in the overbought area, gapping it down below the previous day's low, and going back up again are minuscule. The probabilities are opposite minuscule, that they're going in this direction. So I've learned from experience that if you don't close it right here, which I initially didn't do because I was hoping they would take it back up and let me out. And then when it went down here, I'm thinking, oh man, I should have closed it here. Well, I can't close it now because they might take it back up a little bit. Now it's down here. I'm thinking, oh man, I should have closed here. I'm going to wait to see if they pop it back up. And where do I finally close it? Down here when I know it's not going to go up and it's about ready to close. Now, if I closed it right here, now I'm not sitting here in a mental blur hoping that they're going to take it back up. If I close it right here, now my mind is clear. And if they start taking it down, what type of signal can I anticipate they're doing? A bearish kicker signal. I can reverse my position and hopefully get back this amount of loss here, and then in this case even make some more money on the downside. Yeah, there's only one decision you have to make when things are going down. People tend to cover their, in bear markets, people tend to cover their shorts, which causes the price to spike up, which causes people to look for an early entry to also jump in. Then other shorts enter, and the buying dries up, and it goes down again. That's why bear market rallies. Yeah, also, that is why you want to use the T-line as your final factor. Pfizer, that's not quite a bearish kicker signal. Now, it's not a bullish signal, but it's still above the T-line. So this becomes a much simpler analysis that if you didn't close it here, you held on to it because it stayed above the T-line. If it opens lower tomorrow, I'd close it out. It has to open positive and continue this uptrend. Is it better to get out of a trade and wish you were in than stay in a trade and wish you were out? Exactly. I would rather give up profitability versus giving up profits. Jay, not that so much. When you're buying, what decisions do we make? Is this time to buy? Is it going to continue up? And when do I buy? And how much do I want to buy? And where do I have money to buy that position? How much money do I want to put in? Is the market going up? So all those become part of your decision-making process. When it's time to sell, you only have one decision. You hit the sell button, and it's done. That's why the prices move down much faster. Trust in the T-line is right. Yep. So anytime you see something where the probabilities are going against you, anytime I see a bearish left-right combo, I don't need confirmation. I close it out immediately. Now in this case, when they gapped it up and immediately started selling off, you at least put your safety stop at where it closed the night before. Because when they gap it up in the overbought area and start trading down, that's a good indication that's where the bears have taken control. Now, When they gap it down, what do I have? A bearish left-right combo, gapping down. That becomes someplace you want to short immediately. Myrna, the bigger the signal, the more compelling. So this becomes a good short, because if this opens lower and starts trading lower tomorrow, what type of signal do you have? You've got a bearish doji sandwich that might have another day of that same magnitude. And where would that bring you? Maybe down here to that support level. So there's two elements that I look at when I'm making a trade. One, what is the magnitude of potential return? And two, what is the probability factor? If this opens lower tomorrow and starts trading lower, what are my probabilities? They're probably extremely strong that they're taking it down based upon that big dark cloud bearish belt hold that failed at the 50. Probabilities are pretty strong they're heading lower. This one is the afterthought. Whenever I see something like this, you can see how they're getting, it's kind of the opposite of your, if this was a slow curve to the upside, a slow curve to the downside, and bam, 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 bam. This is the type I like to find. They're harder to scan for, so a lot of times you just have to go through visually and look for things that are starting to roll over. But the probabilities are pretty strong that it's heading down. So here's another one that look where this bearish engulfing signal occurred. Right at the same level it topped out before. So here's another high probability trade setup. If they open this lower tomorrow, where do you think at least your first target might be? Down here to the 50. And if it's the same magnitude as this candle, that might mean they're going through the 50, which could imply they're now heading down into this range. So that was not a sell signal, but if you were long this one and you saw you were in the overbought area and you'd move that far away from the T line, where was your logical stop? At the open of the previous day's candle. Because if they could take it down through that level, who would start to take control, especially that far away from the T line? Obviously the bears are taking control. And where do you think they would be taking it to? Right back to the T line. Now, if you were thinking about shorting it, where do you think your next target is going to be? Probably fill in the gap right here at the moving averages. However, if I look at this and say, all right, they could come from 59, let's say I got shorted it at 59.20 and it came down to 57.20. That's 2 points on a $59 stock. I can figure this out. That's what, 1.5%. That's hardly worth looking at. So even though you can see a chart that has extremely good probabilities of moving in the right direction, it might not be worth the effort, or worth the having your money for that little bit of price movement. On the other hand, if I could maybe buy a I don't know, 58, 57 spread for 20 cents. I'm just picking out a number. So 4%? All right. No, it can't be. 2 points on a $59 stock, 2 points on a $50 stock would be 4%. So it's got to be more like 1.6%. No, you're right. Yeah, 50, maybe 3.5%. How's that? So if I could maybe buy a spread that would be 20 cents, a put spread, that if it went to 57, it would go to $1, maybe that would be worthwhile. I thought you said 59 to 57. Yes. So that'd be 2 points on a $59 price move. That'd be more like 3.5%. Okay, so right now the Dow futures are up 16, which doesn't, even at 4%, it's probably not going to be that dramatic or that worthwhile. So we got to be careful, because if they open this tomorrow down here, you can see there's really no direction in the markets. Same scenario over here on the NASDAQ. If they open it here and trade down here, that's just a choppy downtrending market. So you can see the pattern that was setting up in GRTX. Would I have bought here? Could have been, but when it came back here, that would have made me nervous. That would have probably had me out of the trade. Now I'd be looking to buy back, because you can see it was holding the 50. You definitely could be buying up here, because you could see what pattern was setting up. And why would this be more intriguing? Because when they gapped it up here, it told you that there was a major change of investor sentiment. Arlo was a very simple analysis. Uptrend, consolidation. Look at your J-hook pattern starting with a doji sandwich. There's your dark cloud. There's kind of your, not quite a piercing signal, but there's your bullish engulfing. You can see the J-hook patterns setting up. So if you're still trying to get your mind around the different patterns, my suggestion is find the patterns that you recognize and find 3 or 4 of them and learn them extremely well. And then once you've learned them, depends on whether you want to be buying at the bottom of the trend starting up, or J-hook patterns, or fry pan bottom breakouts. Just learn it extremely well and know what it should do, where your targets should be, and what would make it non-performing. What would tell you that that trade didn't work if you were buying on positive trading? Now, we're buying patterns because of the expectations that this could go much higher. We're closing signals or patterns when they're not doing what our expectations are, like closing back below the halfway point of this candle. Something that the bear or the Japanese rice traders tell us the bears are back in control. Okay, I guess that's about all I've got for tonight. Oh, man, well, I was going to try to make this a short session. So it will be important to see what the pre-market futures are telling us tomorrow. And so there are times where you don't have to trade because you don't have the probabilities clearly evident. But if they're not great, I would rather be out of the trade and not losing any money, or out of trading not losing any money. So I have that money to go after things where I know the probabilities are greatly in my favor that I'm going to make money. So, all right, with that, we'll see everybody bright and early tomorrow morning. We'll see you then.